how interesting is this to you?
Well, I find it very interesting. Until today's trading, I was going to say the Lyft IPO was pretty close to perfect because typically the investment bankers want to see a roughly 8 to 15% rise. More than that, they're giving away too much money. Less than that, they haven't provided an incentive for the early people to commit to an IPO. I would say this looked great, and to see it fall below the opening price, I'm very surprised because, first of all, there are people out trying to support it, and secondly, it's not people who bought at $72 a share, presumably. They didn't buy to lock in a short-term modest loss.
Right.
So it's got to be people, I assume, who were investing at way below 72, and that worries me a little bit because those are the early investors. Those are the people who presumably have insight into the long-term prospects. It's not a good sign if that kind of person is bailing out.
What benchmarks do you think they deserve in terms of valuation? Jim this morning was talking about comparing them to ServiceNows and Salesforces and some cloud companies. Does that make sense to you?
Well, it's tough to find a comparable
because they're first to market in a new market.
Exactly, and I mean I've heard all kinds of wild suggestions about what. I mean, I heard on CNBC last week somebody was saying, "Oh, compare it to a telecom company." Where's that coming from? But I mean, you look at the auto companies. I don't think so. Not the rental car companies. We don't have numbers on something like Airbnb, so it's tricky with that. I looked at the price to revenue numbers for a lot of recent tech IPOs, where similarly the markets weren't all that clear when they went public. And it opened at about 11 times revenue, which was really quite low compared to, say, well, Snap was one of the worst IPOs. It was 58 times revenue, and it looked pretty reasonable on that basis. But as I said, one day's trading doesn't tell us that much. I mean, you're investing in a story here. The numbers in a stock like this, in an untested market, unproven market, are kind of, I don't want to say irrelevant, but they're way subsidiary to the vision that they can articulate. And, yeah, they have big losses, but so Amazon had big losses for years. I personally believe in the company and the market. I think there's a lot of potential there. Exactly where it should trade right now, I don't think anybody knows. Right. But, we'll see over the next week or two. That'll be the key.
So many unicorns hot on the heels, including their number one rival, Uber.
Right.
What do you think about the comparisons to the 2000.com, 90s 2000.com bubble? Does that ring true at all?
Not really. I think, again, as I said, you look for the story, you look for the numbers. We are seeing some companies like Lyft, Uber soon, who are going public with big losses. I think in the wake of the dot-com bubble, we did go through a period where companies wanted to wait until they had some real profits to show, because that was the hallmark of the dot-com thing. No profitability whatsoever. But I look back on that era now, and the stories weren't all that good either for some of these companies.
They did paint themselves as revolutionary, kind of new industry companies.
And nobody knew then. I mean, the digital era was so new, and everything sounded possible, and people were just crazily throwing money at these things. Valuations then, not just in the new companies, but across the board, were crazy. I mean, really way out of line, way more than they are today. And again, I think 11 times revenue at Lyft, that's not a crazy valuation. And again, it doesn't have profits, but it has a lot of revenue, and it has very strong revenue growth, and it has, I think, a very solid business model. But I do think looking at these, each one, and again, one of the problems in the dot-com bubble, it was so indiscriminate. Anybody could walk in and do an IPO. And I think now people are looking closely at it on a case-by-case basis, and you have to do that. I have to say, I'm quite excited to see Airbnb if they come up. I think they've got a great story. They've got a built-in, network effect that's very impressive. So I think they have a really good story, and it'll be very interesting to see the numbers. But I think a story like that is really good. Slack, I don't know that story as well. I'm sure we'll be hearing more about it. Again, you look at the numbers and the story, and I think if people are discriminating, some of these will do great. Others may not do so. Well, that's a healthy sign.
Can you blame investors for selling other stuff to get ready for some of these? Or do you think that's a bad move?
No, not necessarily. I mean, again, I think there's a growth kind of mania going on in the market. It's been going on for some time. You know, the FANG stocks did so well, got so much attention. Everybody wants the next FANG. That makes me a little nervous. You know, the value investors have been in the wilderness now for quite a while. Their day, we all know, their day will come back when this gets a little excessive. So I think there is maybe a slightly undue hunger for growth at any price, but I don't see it wildly out of range. Or we, you know, again, when Snap went public at 58 times revenue, that made me a little bit nervous. But 11 times revenue doesn't strike me as a mania at all.